Can I scale my P&L reliably?
Reliably. Can I scale my P&L reliably? Sure. I mean, you wouldn't be in this business if you couldn't. In many of our studies, we cite the positive average P&L of trades like short strangles and SPY. Many traders wonder how they can achieve this average P&L of their accounts. How do you achieve an average P&L?
By not making mistakes.
Make a lot of trades. You want to achieve an average P&L, you make a lot of trades. You make one trade, can't help you. You make a lot of trades, we can help you. If the win rate is 75% and this is on a 16 Delta Strangle and the average P&L is $78, how do you achieve that? You make a lot of trades. It's that simple. Let's go next slide. And obviously there's other factors like high implied volatility and everything else. We have lots of deltas to choose from when we're looking at an option chain. We generally default to the 16 to 20 deltas. But can we use IVR to optimize our delta selection and safely increase our profits? Sure. If you want to use IVR to optimize your delta selection, then when IVR is super high, you can bump up your delta selection. We don't necessarily do that much, but you can. Let's go to the next slide. Notice that as you scale deltas in low IVR, your P&L increases, but not dramatically. In high IVR, your P&L goes up by roughly 50% when you scale from the 10 delta strangles to the 30 deltas. So all we're showing here is that you get paid for scaling deltas in high IVR. That's the main takeaway here. You get paid for scaling deltas in high IVR.
I mean, it's dramatic. It's 3 times as much.
Yeah. You get paid for scaling deltas in high IVR. That's all it is. Let's go to the next slide.
But we not high now.
We not high now.
Right.
So does this mean that increasing delta is always a safe bet in high IVR? Not necessarily. There are many other factors to consider, such as volatility and the number of occurrences. It's always going to be the number of occurrences. Let's go to the next slide. So as IVR increases, our P&L increases as well, while our success rate stays relatively the same. So what you see here in IVR is the P&L goes up as IVR goes higher, way better when IVR is over 50, which is we're not going to get there now. But the success rate basically stays the same. We've been talking about this for years. Let's go to the next slide. However, the standard deviation of our P&L also increases as IVR increases, which means our portfolio is more volatile. So as IVR goes up, you make more money, you take more risk. That's how it works. Nature of the business. It's always a perfect. Let's go next slide. There's 50% more portfolio risk when IVR is significantly higher. How to reduce the higher IVR volatility? Well, you increase the number of occurrences, just like I started off by saying. You know, when you make a lot of trades as opposed to a few trades, your graph looks much more predictable. That's what our goal is at the end of the year, to make everything look like this.
So they're looking at higher number of trades here.
Yeah, it's just number of trades. That's it. Just
it's hard to do too in low IVR. I mean, every gimme is a gotcha, right? I mean, it's not ideal for finding trades. I know you can place trades, but it's not ideal for finding trades.
Let's go next slide. So the number of occurrences is the number of trades, with an average P&L getting closer to the theoretical as the number of trades increases. And we've shown this study many, many times, from 10 trades to 100 trades to 1,000 trades to all trades. You get close to your theoretical number by just making more trades. And you're going to say, well, I would rather do 10 trades and make twice as much. Yeah, but that number could be negative too. Let's go to the next slide. Just so happens this example is positive. So selling higher IVR strangles, selling higher delta strangles when IVR is high, provides substantial increases in P&L. That's how you scale your P&L reliably compared to selling lower delta strangles. However, when IVR increases, the standard deviation of the P&L, meaning the swings in your portfolio, increase as well. So in order to reduce this higher volatility, increase the number of occurrences.
Yeah, this was a tough one for me because it's easier said than done, right? I mean, we're both light on trades right now with volatility lower in the overall market. It's hard to do. It's not easy. Correct?
Very hard to do, not easy.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.